Welcome to another edition of the MDM podcast. I'm Mike Hockett, our executive editor. Whereas many industrial distributors saw flat 2023 financials, Canada-based Wajax Corporation saw its annual revenue jump nearly 10%, with even bigger gains in net profit and EBITDA. One of the drivers of that growth has been the company's recent acquisitions, including several that have directly expanded the reach and capabilities of Wajax's industrial parts business unit, which is the unit our MDM audience has particularly been interested in. That unit was recently complemented by the creation of Wajax's engineered repair services unit. Driving this recent growth forward alongside other initiatives is President and CEO Iggy Domagalski, who went from leading an independent regional process equipment distributor to the head executive of Wajax just 2 years later at the start of 2022. I invited Iggy onto the podcast to discuss what his first 2 years at the helm have been like and what the key performance drivers have been for Wajax besides just acquisitive growth. I also had him share what the expansion outlook is like for Wajax on the industrial parts front and what the company is up to on the technology side, as well as some of the new things it's doing on the PPE front. Enjoy. Iggy, thanks for joining the MDM podcast.
Mike, thanks for having me on the show. Really appreciate it. Glad to be here.
I'm sure a decent portion of our listeners are familiar with who Wajax Corporation is, but I'd like to begin with an introduction to both you and to Wajax. Can you take me through your career path to how you got to where you are today as president and CEO of Wajax Corporation, as well as what the company looks like today in the markets that it serves?
Sure. Yeah, I'd be happy to, Mike. I guess starting off on your first question about how I got here today, I've been in the industrial distribution space for coming on 20 years. And most of that time was with a company called Tundra Process Solutions, which was a private mid-market industrial distributor and servicer in Western Canada. And we had just a really, really fun time growing that company, both organically and through acquisitions. Most of it was through acquisitions. And in the time that I was there, which was 13 years, we grew it at a compounded annual growth rate of over 30%. So it was always growing fast, and it was always trying to keep the train on the rails, which was super exciting. And then a few years ago, we got a call from Wajax from my predecessor. Now his name is Mark Foote. He called me up and said, "Hey, we've been admiring you from a distance, and we wonder if there if you might consider doing something with us, some kind of transaction." I talked to my partner, who was the chairman of the company and the majority shareholder, and it just seemed like the right timing for him and his family. And so we actually came together to a deal pretty quick. It just seemed like a really, really good fit. Both Tundra and Wajax, the cultures were similar, the businesses were similar, and in the areas where we were really strong, which was process control, instrumentation, valves, motors, and controls. That was Western Canada. That was a hole that Wajax had in their in industrial products and services portfolio. They were much more strong in Quebec and Eastern Canada, and so this was filling the Western Canadian gap, and it was filling a product gap too. So it couldn't have really fit more perfect. And a couple of months after the deal had closed, I was busy still running Tundra, and I got a phone call from Mark Foote saying that he was planning on retiring about 9 or 10 months out, and if I would like to be considered to be one of the people to take over for his role. And I thought that would be a really wonderful honor to steward a company with such a long, wonderful history like Wajax.
Yeah.
And so I went through the process. It was very deep and fairly invasive. But they looked into every nook and cranny of your life, and I guess they didn't find anything too bad. So ultimately, I was fortunate enough to get the role, which I started just kind of late 2021. And so Wajax as a company, really long, wonderful history. We just celebrated our 165th anniversary this past year, which actually makes the company 9 years older than Canada. We are a Canadian-only company. We're publicly traded on the Toronto Stock Exchange, but most of our investors and owners are Canadian, and we're coast to coast. So we've got 119 branches, and a little over 3,200 people, serving pretty much every customer that's out there. We've got 32,000 customers on our roster, and usually about half of those are active. And it's a wonderful business. About half the business is the industrial products and services that we'll be talking about today, and then the other half of the business is our heavy equipment business, which is the sales, distribution, parts and service, and rebuilds of heavy equipment, which would be Hitachi excavators and loaders, and Hyster and Yale forklifts, and engines and transmissions. So that's a really wonderful part of our business, but not the one that we're focusing on today.
Sure. Well, thanks for that background. And yeah, that's fascinating how just the leadership transition happened. Like you said, that there must have been something that they liked about you from the get-go. So very belated congratulations to the role. And that segues into my next question is, you've been Wajax's president and CEO for about 2 years now. And while supply chain and inflation conditions they were still pretty volatile at the time that you started, you were able to at least start after the immediate major pandemic impacts had subsided. But Wajax has definitely been very busy in that short time that you've been its top executive. So overall, how have these first couple of years been for you leading the company?
No, thanks, Mike. I feel so fortunate. I love my job. I think that's a good starting point. I love my job. I love this company. I love the people that I get a chance to work with, and but it's for sure been an adjustment. I came from a privately owned mid-market company that was based in Alberta, which is where I live. I live in Calgary, Alberta. So this company is national, and so there's been a whole bunch of learning, how to operate a national company, and even how the different markets operate. I've been doing my best to learn French. We have a third of our people that live in Quebec, and French is their primary language. So I'm trying to speak to them in their language. It's easier said than done to learn a language when you're not a kid anymore. And then learning all the different segments that we serve too. Within Tundra, our primary segments that we served were oil and gas and oil sands. That was 80% of our business. And now we're much more diversified. So really learning about the construction business, the mining business, other industrials and commercials, the forestry business, transport, government and utilities, metals processing. So really learning about all of those has been a wonderful learning curve too. And then going from mid-market to more enterprise scale, publicly traded company has been new too. I really went from kind of one main stakeholder. He was our chairman, main shareholder, and a wonderful gentleman who I'm very tight with to this day. And now I've gone to about 30 stakeholders. We've got a board of 10 people. We've got about 10, I would say, main investors to keep in touch with. There's analysts that cover our company. There's bankers that have a stake in what we do. So I've gone from 1 to 30 stakeholders, which takes up a little bit more time, but I feel lucky. These folks are so talented, so knowledgeable in the areas that they specialize in, and they've got a very large vested interest in us not going bankrupt. So anytime I want to talk to any of them and pick their brain on anything, they're always happy to make the time, which has been really, really wonderful. So I feel like I've got these 30 new folks that I can count on and pick their brain. So that's been the transition, and it's been. It's also internally in the company, there's been a lot to learn. All the people were new to me, the business lines were new to me, and we've been growing. So over the past 2 years, we've grown about 30%, which so we've grown from Canadian dollars from 1.6 billion to 2.2 billion. All the growth challenges that come along with that are, those always show up. So making sure that you can bring on the best people, making sure that you can hold on to them, making sure that your systems can keep up, making sure that your customers still like what you're doing. So all of that has been really, really fun challenges that our company's been going through, and that I feel very fortunate to be able to help our company through those times.
Well, that is definitely quite the learning curve and the network expansion for you personally, but really glad to hear that it's been, a smooth process, and it sounds like an enjoyable one for you so far. So
Absolutely.
our audience here at MDM is particularly interested in Wajax's industrial parts business unit, and the company has made some acquisitions over the past several years, like you mentioned, that have directly enhanced that industrial parts business, both in terms of revenue and in scale and in capabilities. Wajax added Ontario-based Beta Fluid Power and Beta Industrial this past September, Alberta-based Polyphase Engineered Controls a couple of months earlier, and Alberta-based Powell Valve in July of 2022. So I'd love to get an overall update on what Wajax looks like on the industrial parts side, which now is also complemented by Wajax's engineered repair services offering.
Yeah, thanks, Mike. We really view these two businesses as being together. So we've got five main areas that we think about in our industrial parts and engineered repaired service business. So first one is bearing and power transmission. And so there we do, the sales of bearings and power transmission products, but we also do service, right? Like we'll do pillow blocks and service and repairs and rebuilds as our customers need. The next division is our hydraulics and pneumatics. And so within that business, of course, we'll sell you a hydraulic cylinder. But we also have about 10 shops across the country where we do repairs to hydraulic cylinders and also what I'll call value-added assemblies. So just as an example, we can sell you just a hydraulic cylinder, or we can build you a whole assembly that will be used to power a car wash that's got the cylinders in it. So that's an example of a value-added service that we would offer. Our third one would be electromechanical. And so that, for the most part, is the sales and service and rebuilds of electrical motors. A lot of that came through two acquisitions that we did about 5 years ago. One of them is called Delhomme, a Quebec-based motor rewind company, and North Point Technical Services, sorry. That was another acquisition we did a few years ago of about 7 motor shops across the country. And so those two businesses together are a wonderful business for us. And these are the kind of shops that, we have large dip tanks, large burnout ovens, and really rely on a lot of people like technical motor winders and technical specialists, millwrights, machinists, so those kind of folks. So that's the third area. And then the fourth area I'll call process control, and it's got a bunch of things in it, from instrumentation, valves, automation, variable frequency drives, and a bunch of the businesses that we've recently bought, including Polyphase and the Powell Valve ones that you mentioned, and the Tundra business that I used to run, all fall into that category. Again, it's sales of those products, so it's instrumentation products. So that would be temperature, pressure, level, and flow. It would be valves of all types, and then electrical equipment like VFDs. And in all those categories, we offer really deep value-add engineered repaired services, and not just services, but assembly building. So in the Polyphase business that we purchased, we can build you a panel. And so that panel would include a variable frequency drive, which is used to control an electric motor, and then all the communication equipment and all kind of, all buttoned up in a nice package that you can put indoors, or we can make it weatherproof so it can go outdoors, or explosion proof if required by the plant. And so we really see those two businesses as driving each other. And I think that's a bit of a competitive advantage that we have in the market. Some of our competitors will be, for the most part, a sole distributor, so limited service capabilities. But in our business, when we wrap up our industrial products and services business, it's about $1 billion business, but more than a third of that is these services and value-added assemblies. And I think that's a bit of a differentiator for us in the market.
Wajax's fourth quarter investor presentation noted that one of the company's strategic priorities is to acquire industrial parts and engineered repair services businesses. So I'm sure you can't share any current prospects, but it sounds like we can expect more M&A out of the company going forward on that end. Are there any key qualities that Wajax looks for, on its acquisition checklist? Is there any criteria that really comes to mind?
Yeah, there's a bunch of criteria, and I'm happy to get into some of them. but acquiring companies in the industrial parts and engineered repaired service space is absolutely a priority for us. It's one of our top strategic priorities, and we love that business. And I'm very familiar with that business, and I love that business too. When you look at our company, we've going back to like 2016, kind of last 8 years or so, we've grown top line revenues by 8%, which is reasonable. But our this industrial products and services business has grown by 14%. So it's growing at almost double the speed that our whole business is growing at. And that was the same last year. Last year, our whole business grew 10%, but this IP and ERS business grew 18%. So it's generally growing double as fast, which we love. Some of that is driven by acquisitions, but a lot of it is driven just through organic efforts. I think we've got exceptional product lines. We've got great manufacturers that support us. Some are exclusive, where we're the only sellers in the country, and some are non-exclusive, where and that would be more true in our bearings and our hydraulics business. That's more of a non-exclusive business where we would compete with other distributors offering the exact same product. And in those cases, we think that our value add to the customer is what we think are more knowledgeable salespeople and this layered on value added service business that we can offer our customers. But in terms of what we look for in companies that we'd like to add to our family, and I use the word family specifically because not only are we looking for things in companies, but the sellers who own these companies, they're looking for something too, and they're looking for something important. And I've found, especially in Canada, a little bit more so than the US, is just the care about what happens to my people and what happens to my legacy and all of that. It's higher up on the scale than in most other places. And so I think the seller that they are going to a good permanent home. We're a publicly traded company, which means that we're not operated by a private equity firm that's looking to flip the company every 5 years. Where it's more of a permanent home, and the companies that we buy, we hold forever. And I think that's important. And we've done a bunch of acquisitions. We've over the last few years, we've been doing 2 a year. We've deployed about 200 million in capital over the last few years to buying companies. And the story with the ownership teams is pretty similar. It's that Wajax kept its promises, and there are lots of promises made that are not on paper, like the promises around people are not going to get laid off right away. Like, we're not going to fire a third of the people. Like, we're buying the company because we want the people. And all of those promises have become true in every case, including the case where we sold Tundra to Wajax. So I think those sellers being able to speak with some of those people that went through this exact experience is very important. So I think what the sellers is looking for is just as important, and I think we offer a compelling story. From what we're looking for, I guess the first thing is we're not looking for broken companies. We're looking for good businesses that are operating well, that are profitable, and that we can just help them do better. What I've found as a kind of an enterprise level company, usually our back end is better. Our safety programs, our IT programs, HR programs, finance programs, those are usually better than these small companies, and we're able to deliver them at a lower cost. So being able to slowly layer those into these companies really helps. And the people in those functions in those companies usually just get absorbed into that function. So it's not a matter of job losses. It's just doing it with better systems. And then we found our buying power is usually better. So when it comes to actually buying the products that we sell, we'll be able to do that better than the company that we're buying. So you can usually add a little bit of additional profitability there. And we have better programs. Like we've got a pension as an example. Most of these small companies don't have pension, so it's a win for the employees. So looking for companies where we think we can add value, where we think there can be cross-selling, a company that's run well, and in an area that we understand. So we're not looking to get into areas that are totally foreign to us. We want to do things in those categories that I mentioned, the bearing, power transmission, pneumatics, etc. We want to do things that we understand in geographies that we understand, but usually these companies just fill a little bit of a hole. Where maybe in Ontario we're not so strong in one of the categories, which was the case in hydraulics, so we bought a hydraulics company in Ontario, and that helped us fill that gap. And we'll continue to fill those gaps, and that really is our acquisition strategy. We recently increased our credit line, so we added $100 million of borrowing capacity on there. So we're ready to go. We've got a couple people in our full-time acquisition team and a large group of people behind them in legal and safety and due diligence to help make these processes pretty smooth. So yeah, we've been doing 2 a year for the last number of years. If we could do 2 to 4 a year, I think that's where we'd want to be, unless we do a really big one. Then it's a little bit harder to digest one of those as opposed to a bunch of little ones.
Well, I'll definitely keep my eyes out for any future news out of Wajax on that front. You already touched on Wajax's financials a little bit, but I want to dig in a little more here. Looking at its 2023 full year numbers, the overall sales increased about 10% compared to 2022 to almost $1.6 billion in US dollars, which was a company record. Net profit jumped about 12% and adjusted EBITDA increased about 19%. So a great financial year for the company by any measure. Can you touch on what some of the key drivers were for that revenue and profit growth, as well as how that momentum has carried into 2024?
A huge thanks goes out to our team. We've got some wonderful people at our company, and they're the ones that really drive it all. I mean, guys like me, I'm the overhead. So they especially our front lines, our technicians, and our salespeople, and our order takers, and our order desks. They're the ones that are making the magic happen. I think some of the key drivers that allowed us to grow is, I mean, the market's good. Like Canada and the US, things are still pretty solid. We're starting to see a little bit of softness in some areas, but that's been happening for a couple of years, I think. So it's good to have good end markets. And a couple specifically, I think our mining and oil and gas are pretty strong in this country at this time. So that's been helpful. And then internally, we're pretty laser focused on what we're doing. We've got a clear strategic plan. We've got a clear set of core values that we live by, and so I think having really, really clear alignment internally on what we're doing has helped drive that forward. And our top strategic priority is continuing to build a people first company. We are. If everyone walked out of Wajax and nobody came back the next day, we would be out of business immediately. And so the people are our most important asset, and building a people first company is important. And I guess I have this belief. I think business can be the most powerful force for good in the world. We have people, captured to some extent for more time than everything else that they do combined, other than sleeping. And in the time that we have them, in that 40-ish hours a week that we have them, we can send them home fulfilled, happy, full of positive energy. And I think that positivity flows through to their communities and their families, and that's what we really aim to do by building a people first company. But when people feel their best, I think they give their best. They give it to our customers, they give it to our suppliers, they give it to each other, and ultimately, I think it just drives a better business full of more engaged people, which of course would help with revenue growth and profit growth. And so I think that's one of the internal drivers that we have that's been helping.
Looking again specifically at Wajax's industrial parts performance, its 2023 sales were about $446 million in US dollars. That increased about 12.9% year over or compared to 2022, despite a slight dip in the fourth quarter. Same kind of question as before. What can you identify as the tailwinds for that industrial parts segment, as well as any potential headwinds currently out there?
I think good tailwinds that we've had is just strength in the economy. That's really helpful. And our company, Wajax, we're exposed to all facets of the economy, whether it's construction, mining, industrial, forestry, oil and gas, transport, government, metals. We touch it all. And So as goes the economy, as goes Wajax. And so when things are good in Canada, things will usually be kind of good for us. And if things slow down in the country, things would slow down for us a little bit as well. And so currently things are good. Our forecasts for the economy are generally positive. I think it's been a couple really, really great years. And so for growth levels to level out would be something reasonable to expect. But generally, we're pretty constructive on the whole Canadian economy. If we're looking into some specific sectors, construction is one that I think is strong. We do less in the industrial products and services business. That's more of our heavy equipment business, but it's strong. As it relates to industrial products, mining. Mining seems to be strong, and we're not even counting on any new mines opening. We're just talking about existing mines, and whether that's coal or metallurgical coal or gold or nickel, copper, like that, they're all pretty strong. They're all still spending. Commodity prices are good, and the world needs all of that stuff. And there's no slowdown in from what we can see of the world needing all of those minerals. And so we feel pretty good about mining. Oil and gas, we feel pretty good about. I live kind of in the heart of Canadian oil and gas country and have for almost 2 decades. And there's always cycles in business. This cycle, which has been going on since 2014, so it's almost 10 years, feels different. In 2014, oil prices really nosedived. And then they slowly started to come up from just horrific low levels. And as they started to go up, in every other cycle that I've seen and that you read about, oil and gas spending goes up exactly with oil prices. And then when oil prices go down, the spending goes down. But the oil producers have been so disciplined with their capital spending during this cycle that their spending has not gone up like it has in the past. So oil prices have gone up, they've stayed up, and the spending hasn't been as high. And so what the oil companies have been doing is basically they're flush with a lot of money and they're giving it back to shareholders. They're doing like special dividends or they're buying back their own shares, but they're not necessarily investing it all back in the business. So even if oil prices taper off quite a bit, I believe that the capital spending and the maintenance, repair, and operation spending would not be as affected as it has been in previous cycles. So oil and gas has been good, and kind of unless it like really oil prices get devastated for some reason, which they always can. I think that sector is pretty solid as well. So we kind of feel pretty good that there's some good tailwinds there. And yeah, just the potential headwinds, I think, is just the economy slowing down a little bit. Forestry has been weak generally. I mean, we've had a lot of fires in this country. There's been some regulatory things that have screwed things up, and some of the pulp and paper mills have been shutting down. And there's more imports of lumber from other places, so that kind of hurts a little bit more. I don't know that it can get worse, but it's certainly not in a great place. So yeah, I think those are some of the themes. One other theme I think that I would touch on is just electrification. That is a theme that is happening around the world, and Canada and the US are no different. And we've got a few businesses that are exposed to that quite positively. So our whole electromechanical business, which is the repair and sales of electrical motors, there's more electrical motors, not less. And so that's a positive theme for us. Part of that business actually involves fixing the gearboxes that are up in windmills as well. So that's kind of the renewables theme where we're positively exposed to that. Along with electrification, a lot of companies are attaching variable frequency drives to their electrical motors. We have a whole business that sells and services and packages up variable frequency drives into panels. So that one's going positive. And then we've got a small business that supplies and installs electrical vehicle chargers. And so all of those have this positive exposure to this electrification theme that's happening in our country. So I think overall more good than slowdown. And so we're feeling pretty positive about the short, mid, and long-term future of this business.
Another priority noted on Wajax's fourth quarter investor presentation was the continued rollout of its ERP system and technology improvements. Is there anything you can share on that front in terms of technology initiatives for the company?
Yeah, our main technology initiative right now is rolling out our ERP to our entire business. We've been doing it for a number of years. We've taken the approach of being slow and steady about it and building the internal expertise and not relying on external consultants too much. And we've done that. We've done that successfully. And one of the big commitments that we made to ourselves when we started to roll this out a number of years ago, which was before my time, but we've kept it, is that we're making zero customizations to the software. And we specifically picked an ERP supplier that's not SAP or Oracle. Those are wonderful pieces of software, but if we want to make no customizations and we make suggestions to SAP or Oracle, they're certainly not listening to little Wajax on what they're doing. But the company that we did choose, Infor M3, we would be on one of their larger customers, and they do listen to us. And so when we have good ideas for suggestions to the software, they'll make them enterprise-wide, available to all their customers. And so it's been a wonderful relationship. We've got a very tight relationship with the supplier and creator of this software who listens to us. We've got a voice at the table, and the rollouts have been going quite smoothly. I've been through a number of ERP rollouts in my career. Most have been disasters, as they are at most companies. Yeah. And this one has been, I mean, they're all painful. No matter how you do it, it's change. So people have to learn a new software, and that's always painful. But this one has been by far the least painful that I've seen, and it's working the best. So our plan is to have it rolled out to 90% of our business by the end of 2024, and then finish up the last 10% in 2025. We've invested an incredible amount in the training of our teams to make it happen, and in the cleaning of data and transferring over the right data and not having the garbage in, garbage out problem. So we're feeling pretty confident about the next half of the rollout over the next year and a half or so. And then we've got some other technological initiatives that are, I think, smaller and less impactful, but quite important too. And that's the rollout of our mobile field service. So really helping our technicians to do everything on iPads rather than paper. And then we're starting to, I would say we're dabbling in AI. So a couple of the areas that we're dabbling in is we created an IT chatbot called Barista. It's an internal chatbot for our people. So when people need to, have their basic IT questions answered or do something basic, most of those are going through this chatbot now, and that's been quite successful. And then we're starting to use AI in things like pricing suggestions. So when we're, here's the last price that we charge to the customer, but based on, some scouring of all of our data and all of our transactions and types of customers, and this is this type of customer, our software is spitting out here's some different price suggestions just based on some things that the software might be able to see that inside salesperson might not have access to. So those are just two areas. We're dabbling in other areas, but I would say we're definitely a dabbler in the AI space, not a full adopter yet.
I think that's the case for most distributors, large and small, that no one's kind of going full bore with AI right yet. Most people, I think, are in a watch and learn, wait and see, approach to it to see what is working and then expand it from there. But definitely interesting to see that Wajax is involved to at least to some capacity. Well, one product line that I know that you have particular expertise in is in PPE. And given that Wajax serves some of those heavy PPE markets of construction and forestry, mining, material handling, and power systems, having the right PPE is critical. And I know that the COVID-19 pandemic really skewed the general public's focus on PPE to just respirators. But what have you and the Wajax team seen in terms of any overall trends in the ways that customers are managing their PPE today?
Yeah, our company's been around a long time, and we're one of Canada's most diversified companies. From all the different products that we offer, we can really solve a lot of our customers' problems, and we try to be this one-stop shop. And that's kind of how we got into PPE. It was really our customers pulling us into it and saying, hey, you offer us all these other things. We need PPE too. Is that something that you could offer us? And we thought, yeah, I think we can. And so we've got a decent sized business now that's really been driven by our customers asking us for it. There's a lot of other suppliers out there that you can get PPE from, that do a wonderful job, and it's their core business. So we do it because it's convenient for our customers, and I think I'll just give you an example of one that I really like that we do for a mine in Quebec. Um, it's a customer specific solution that we've designed, and so these folks they'll have a new person starting, and let's say they're a millwright level 2. A millwright level 2 is entitled to 2 sets of coveralls a year, 1 set of boots a year, and another $300 in spending on safety gear, on gloves and hats of their choosing. So what will happen, that person will start, then they'll come into the local Wajax office, and they'll get measured up for everything by our people. And then we know that they're a millwright too, so we know their spending level limits, and that will all get input into the computer system. And then we have a special portal only for that customer. And so their people, all their employees have their own individual logins. They can go in, and they can, they see how much spending they have left. Okay, I can still get a set of boots and a jacket, and I can buy a couple pairs of gloves. So they do that. They click on everything. All the accounting gets done in the background, sent to the customer in an electronic digital interface, like in the EDI that they want. And then the next day, a box shows up at the plant with the millwright to John Smith's name on it. Opens it up, it's got the exact stuff that he wants in it, and he's ready to go. And it's kind of seamless for the customer. So we've just taken the PPE headache just completely off of them, and we just do it. And so that's a story that I really like, and that's more of what I would like to do in that business, because we have a reasonable sized business in PPE, but there's so many other ones out there, competitors that are bigger. They can get way better pricing and offer it cheaper. And I've never really liked being in we're the cheapest game. I would rather add value and be able to charge a fair price. And so that's that's how we're trying to think about it in the PPE business.
You already answered this next question to some degree with that response, but anything else that Wajax is doing on the PPE front to help customers with their strategy around PPE inventory or their overall safety programs?
Yeah, and one of the, this was that example I just gave you was for one specific customer, and I'd love to do that for more customers. So if any of those folks are on the line and listening, please give me a call. But we'll do things like vending machines as well. And that's for PPE and other things. There's some other kind of consumables that don't necessarily fall in the PPE bucket. And we'll have our local folks go by on a weekly basis and restock the machines and make it easy for the customers. So I think for us, it's really all about just how do we make it easy for them, and how do we take this PPE headache off of their plate. And maybe headache's the wrong word to use, but I mean, these customers, as an example, they're a mine. Their job is to keep their people safe, but their main business is to extract whatever material and sell it. And if we can give them an easy button for at least the PPE portion of keeping their people safe, so that they don't have to worry about it and they can focus on other things, that's something that we definitely like to do.
Well, that is all the planned questions I had for you, but before we sign off, is there anything else about Wajax that you think our audience of distribution executives should know that we haven't covered yet, or just any other general parting words here?
I think we've really covered a lot here, Mike. I really enjoyed the time here, and thank you for your very thoughtful questions. A lot of them you pulled right out of our investor presentation and other materials, and so I'm glad to see that people are reading that. We put a lot of time and effort into it. So I think I would really just end off with big thanks to you, Mike. Thanks to MDM for having an interest in our company, and I'm always happy to engage with folks who who think that I might be able to add value, or think that maybe they may be able to add value to Wajax. I'm pretty easy to find. LinkedIn is the media platform that I spend time on, and I'm quite easy to find on there and easy to connect with. So happy to connect with anyone if they feel it makes sense.
Well, you've given me plenty of reason to remain interested in Wajax going forward here. Just a lot of things that you guys are up to, and I'm glad you were able to cover a lot of these just different cool initiatives that you guys are doing, whether it's on the technology front, PPE, or just general, how are you empowering your employees to remain the key driver for the business. So it's all good stuff. Well,
Thanks very much,
Iggy,
Mike.
thanks again for joining the MDM podcast.
Thank you very much.